Welcome to BigONE Weekly News Update. I'm Gavin. The global financial landscape is currently navigating a complex intersection of geopolitical tension and shifting monetary policy. While equity markets show remarkable resilience, the Federal Reserve is signaling a transition away from its previous dovish bias, primarily driven by a sustained energy shock rooted in the Middle East. At the April FOMC meeting, the Federal Reserve kept policy rates unchanged, as widely expected. While the official statement suggested the next move would likely be a cut, a significant internal shift is underway as 3 members formally objected to the statement's dovish bias. This represents the largest number of dissents at a policy meeting since 1992, indicating that FOMC members increasingly believe the threshold for both cutting and hiking rates is now high. The primary catalyst for this shift is the sustained energy shock caused by the closure of the Strait of Hormuz, a disruption that could keep energy costs elevated for months. Consequently, policy rates are now expected to remain unchanged for the remainder of the year. Despite hawkish undertones and rising oil prices, global markets have remained surprisingly steady. Led by technology stocks, the S&P 500 and Nasdaq reached new highs, marking their 5th consecutive weekly gain. The crypto market, however, remains in a holding pattern while navigating these macro shifts. Over the past week, Bitcoin closed below $79,000, Ethereum fell about 2% to near $2,300, and Solana dropped around 3.5% to $84. Even with this consolidation, Bitcoin has been among the strongest performers over the past month, helping major assets recover losses sustained in March. On the regulatory front, the Clarity Act reached a final stage with a crucial compromise regarding stablecoin yields. The latest version prohibits issuers from passing reserve income directly to users, ensuring stablecoins do not function like interest-bearing savings accounts. However, flexibility remains for activity-based rewards, allowing incentives for payments, lending, and participation in on-chain applications. This arrangement creates a workable balance between the traditional banking sector and the crypto industry. Meanwhile, the DeFi sector is focused on liquidity repair following a $290 million exploit of RSETH. The incident pushed utilization rates for stablecoins and WETH on Aave to 100%, effectively locking liquidity. While stablecoin utilization has started to normalize thanks to institutional support, WETH utilization remains high at 99.16%. This persistent pressure is linked to looped leverage strategies that have become uneconomical and WETH that remains locked in the frozen RSETH market. Looking ahead, the market faces a busy week of macro and corporate catalysts. Significant data releases include ISM, JOLTS, and trade data on May 5th, followed by ADP on May 6th and the critical non-farm payrolls report on May 8th. The earnings calendar is equally dense with reports from tech and consumer giants like AMD, Shopify, Disney, and McDonald's. In the crypto space, the industry will be watching the Clarity deadline on May 5th and various token unlocks scheduled for May 7th. Join BigONE today and take advantage of the growing cryptocurrency market.